Hello guys, how you doing? Hope you enjoy your weekend. I'm gonna do today a short clip about the price action on Euro USD. Let's go. Okay, as you can see, we have here the daily chart. Now here we have all August price action. Then we have September, and then finally what happened on the first 2 weeks of this current month of October. Okay, so if we consider that on August we had a, let's say, a clean price action on the bullish side. As you can see, we were making each time higher highs and higher lows, so it was a clear bullish bias. Right now, as you can see, on September, price was like held in accumulation here from the, let's say, the last 2 weeks of August till mid of September, right? When we had then this sell-off from premium prices here. They sold off and took all this previous liquidity, resting below all these lows here. So this purge of liquidity is important because there were many people and big funds were buying all this time, so we had all that liquidity was taken out, right? So when you have that, you should consider that from the last swing, which is this drop here or this sell-off, you will have some kind of retracement. Sometimes price can retrace all back again to premium prices, considering this was the last swing high from the last days of September till this September low. So as you can see, before finishing that month, price retraced back almost to half of this sell-off, right? So then price was like going up, going down, going up. So we clearly, if we drop down to, let's say, 4 hour, 1 hour, we will see that price was held in accumulation here. So when you have an accumulation, you could expect some days that you will have some expansion, right? So after this accumulation, you will see that they broke again the structure, so we keep the momentum going up, right? Now if we consider that, you will see that they, on the following days, they keep dropping back to that accumulation. So it's important to consider these levels around here, which are, for instance, 117.20s, 117.50s. So let me try to draw something here, this accumulation around here, and let me project that in the future so you will see what happened around those levels. So let's go back and drop to 4 hour. Now here we have the 4 hour chart. As you can see, from this point, after we broke again and made a new swing high, a higher high, price reversed and rebalanced all these dealing range. This dealing range from this swing low to this swing high was rebalanced back again to discount prices, and then they broke again, right? So you will see that they were testing the 117 big figure here, then 117.20s around here and back again here, and then they use the 117.50 or so around this area here. So let's see. Okay, let's draw something here. We broke there, then you will see that they reverse back, then we have this new swing high, and it's important to note that they were keeping the structure, the bullish structure, intact. So we had swing low, higher low, then another higher low here, another one. So the bullish momentum was still intact. Okay, now even though here they dropped price again and were not able to create a new swing high, it's okay, because we still haven't break the structure to bearish, right? And we had this imbalance here. This is an imbalance that will basically be the swing high of September, the last one that we saw on the daily chart. So this area here was our target, right? Now let's go down to 1 hour. Okay, you will see here the same thing. They were accumulating and breaking again, then they drop back to this accumulation. You will see that we have 117.20 here or so, right, before breaking again this structure. So when we break this structure, we will use that swing low as important. It's important for us to consider this swing low here, because it's the one that began the rally that broke again the structure to the upside, right? So we have this dealing range from this swing low to this swing high. So when price retraces, the sentiment, the short-term sentiment, is gonna be bearish, but we're gonna buy down here, because if we consider all this rally and if we're gonna keep the momentum going up, you wanna buy here. You don't wanna buy up here, because you're gonna be buying at 117 or 118 big figure. You don't wanna buy that, because it's premium prices. You wanna buy low prices or cheaper prices to then sell by selling to willing buyers up here. Does it make sense? You buy here and then you sell that to buy stops here. Remember that up here is gonna be buy stops of people, as well as when we see these clean highs, there's gonna be people having their buy stops there, right? So let's continue. Okay, we have the let's see, 150s or so here, right? So it's another level of importance for us. And as you can see, when price dropped here, we had a nice reaction right away, right? And then we created a, which is in retail is known as a double tops. So when you see that, there's gonna be liquidity up there, so that would be our target. And then again, the new dealing range would be from this swing low to this swing highs here, right? So if we are gonna be buying, we buy the dips. So they drop price and we buy here again. back again in this small accumulation that we see here, right? We buy that drop, and then our target is gonna be right up here. As you can see, price was again going higher, but was not able to tackle that liquidity until Friday at London Open, which is this rally, this huge rally that you see here. They went up like 40 pips or so. They took all that liquidity, then they reaccumulated orders here and then continue up. So they clear all the buy stops up here and all the people that changed the bias, because as you can see, they made this all short-term high, which is a daily high. Then they created this one, then this one. So in the short term, the indicators is gonna show a short term that is gonna be bearish. So we will take advantage of that, because there's gonna be people confused, because they're gonna be seeing these levels up here, all these levels here, up here and up here as they're gonna see those prices up here, or that accumulation up here, as a resistance levels, right? So as you can see, when price reached that levels there, they retrace a bit. But what they did, if you go to lower time frames on Friday, you will see that you have this swing low to this swing high. You have a dealing range there. If we drop, let's say, to 5 minutes, you will see clearly that same range, which I believe is this one. So you will see that this swing low broke the short-term highs, which are these two. They broke that, and then they retrace back again to that accumulation there. You see this accumulation here, right? When that accumulation was broken, they retraced back there, and then they explode up and took all this liquidity resting up here. This liquidity of these equal highs in daily, and also this one up here. So this week was really clear in terms of price action and dealing range. As you can see, when they broke the structure, you're gonna consider the swing low that began that rally that broke the structure. So you have the swing low up to the swing high. So if you're gonna continue buying, you're gonna wait till price is rebalanced back again to these levels here. We have the 20 levels, we can also use the 25, right? We're gonna use the big figures and the 5 and 10 figures. Okay, so the 25, you will see the low here comes at 25, 117.25, 5 pipettes, and the low here 117.25, 1 pipette. So it's a nice level to buy there, because price dropped back again. As you can see, this day was like an accumulation day, because they dropped, then went out, then dropped, then back up again, then drop. So they kept the price in that accumulation. So when price returns that, you can buy again, right? Now same thing here, you have like a small accumulation here, which broke again to the upside. Then when price dropped, it was New York, 15 GMT is New York. So as you can see, you will see how they reach aggressively that level. So basically they are inducing more sales. Why? Because they created you will see here that they made this high here, then they created another lower high here, then another one here which is lower, and then another one. So when retail see that, they expect price to broke again a short-term low like these ones here. So they broke that, and then when price returns back again to those lows, they sell. So they sold here, they sold, and then finally they sold here. But then price reversed. Why reverse? Because they were reaccumulating loans. Remember all these blue rectangle that you see here, this big one, all this area is a high time frame accumulation of the previous days. So they are returning back again to that accumulation to pick more buying orders. So they are reaccumulating loans. And as you can see, they kept the structure intact, right? Because they were not breaking important lows. Why these lows are important? Because these are daily swing lows. This is a daily swing low, this is another daily swing low, and then they created in October 8th this daily swing low, and finally they took all those sellers up here, they took them out. So it was a clear price action this week. I hope you guys take advantage of that, and any questions, do not hesitate to contact us, and we will be willing to help you out. Okay, hope you enjoyed this one, and anything, just let us know. Okay, bye bye, thank you.